So yeah, a quick one, guys. So um, to yesterday's commentary, we're talking about dollar index, and we're talking about um, you know, this expansion overnight. That was Sunday's price action, and prices ran through buy side here. And we talked about the possibility, the return back into the range, um, range defined. I mean, this price range. If we look at this, broker, you'd see that on this broker, the markets essentially delivered price completely into this inefficiency, and now we have sell side offering here. Okay, so what does it mean for us? What does it mean for me going forward into Tuesday? Well, first off, that was the reason why I really waited for the new candles opening, because on the daily chart we will see the daily chart better here. On the daily chart, someone could easily, probably just call this, a sweep buy side here, a very good rejection. I mean, see how the bodies of the candle is actually respecting this bearish block and this other block as well. But this is not a daily time frame confirming protocol. This is not what I talk about, okay? Because the markets could literally open today and look at how it's gapped. And that's the thing about price action this period. These gaps and stuff like that, with all of the things going around. I mean, the markets could gap here and continue to trade higher tomorrow. So there is nothing yet. Well, we are almost there, but there's nothing yet on daily chart that could validate, high probability longs going into the London session tomorrow. Okay, the London session. So with this rejection in mind, okay, and look at how, if you look closely, you can see how we closed inside this candle's body, but then you see how we have this opening range gap, and because of this is obviously a red flag for me. Okay, because if we want to go in with the narrative of this rejection, I mean, the market should just open normally, and we should begin seeing downside somehow. But this is not convincing enough, really, on the dollar index. This is not convincing because we could gap, probably London session, they return into the gap and expand to filling this week. So there's absolutely nothing yet. We are still almost there. Okay, there's no daily time frame confirming protocol yet, and nothing on the daily chart is showing bearish for dollar index, and also the daily time frame isn't bullish either. Really, you can see how flat we are on the daily chart, because how do you want to validate longs here? Because we're essentially below key areas like here, this swing point and this swing point. And also this is a monthly time frame level. I mean, the old monthly volume balance, I think I showed it in the commentary yesterday. Now this level here, and primarily there is no go yet, and we're trying not to be impulsive. We do not want to be impulsive. Now if we look at the economic calendar, let's see what we have going into today's trading. We have the London close on job opening, so this will be the perfect time of day for me to study intraday price actions and determine if dollar index is going to go up or dollar index is going to go down. But for now, there's absolutely nothing in daily chart validation, because what am I going to use to determine if we're going to go up? Okay, is it because we're having long weeks here, and then I'm now saying that tomorrow is going to fail this week? Why? What level are we keying off of? What's the narrative? I mean, and that's one of the reasons why when I talk about price action, when I say when markets run high time from liquidity pool, I talked about the rejection block, I think, through the lens of the weekly chart and said they could just return back. Okay, and that's just it. And even though I did not know when they really were gonna just fill in this inefficiency from the overnight trading, we can as well go into the lower time frame chart to study price action. Really, we can go into lower time frame chart. Last week Friday I uploaded something on my Twitter account, and I was talking about day trading model, and I talked about the opening price. I talked about narrative, draw, liquidity, and mind you, in the commentary we were talking about how markets could potentially trade into this inefficiency, okay, this gap. And today for me it's just trading day, despite for the fact that the higher time frame draw on liquidity for me has been met. So I didn't want to go into the markets on Monday. I just wanted to observe and see what they're likely to do. And you want to look at the opening price first, okay, in studying price action from yesterday's trading, because this would be a very good breakdown. Okay, so we have the opening price here, and I talked about time of day. You can see this is set to New York time, so you can look at everything below here. So this is 3. We want to set it to 3 and to 4. All right. So we have this here. Perfect. So, and since we have narrative already, which the expectation is for the markets to return into this volume balance, and we have the opening price, and we can see how the markets traded through the opening price post midnight New York. Now, what's our key level? Well, if you recall, in the morning I was talking about the volume, the rejection block on the weekly chart, and that could really just facilitate a return back into the range, since we've taken buy side liquidity here above the previous week's high. So the rejection block here, let's put it on the lower time frame. All right, so we have the rejection block here, we have the opening price. So you can see how we were consolidating around the high time frame level, the key level at the rejection block, and with an eye for a market returning into this old this new week opening gap, this gap, whatever gap you want to call it, right? And we can see we have a run through the opening price here at midnight. Time of day, you can see it exactly 3, and the market showed displacement. Okay, now this is key. The market showed what? The market showed displacement. Now this displacement, this fair value gap, is what you want to note. You want to extend it forward, and this is it, and this is the fair value gap, and this is the fair value gap you want to be looking for a trade. And what are you aiming for? You're aiming for this inefficiency, and your first objective would be the midpoint of this inefficiency. Now I want to use some other okay, I'm really trying to mark out. Okay, let me take this off. I have levels from Okay, so okay. I don't think I'm getting what I want from there. I'm gonna use this price feed. I can always make this back later. Just so obsessed with this levels and all of that. So help me God. Alright. So now that we have, the opening price at midnight here, and we have, a run against the high time frame buys, we're returning into the rejection block, and the market showed displacement just post 3 in the New York session, in the morning of London session, and you can see this fair value gap here. This fair value gap, this is the fair value gap you want to eyeball, and your target would be the midpoint of this whole gap, first objective, and your subsequent objective would be the complete closure of this gap. I think we had a closure here, and they just completely just rebalanced it to the T and all of that. Okay, now if you look closely here, this setup came in the London session 3, and if you want to study how this setup came about, now mind you, you have to note first that the market's trading to the midpoint of this first. That was early in the New York session. Okay, so as soon as prices hit objective here, you want to stay flat. And why else do you want to stay flat? Well, if you study the economic calendar yesterday, there was ISM manufacturing PMI by around 4 p.m. By 4 p.m. yesterday, the London session, that will be 10 a.m. New York time. And if we want to outline what if we want to outline 10, you can see this is 10 to 11. Okay, so this is 3 for London session, and New York session based off of the economic and calendar. This is where the setup is forming. So you can see the first objective was hit, the midpoint, and the markets retraced and markets retraced back into the range. And if you look closely here, there was a run on short-term high, which seemed like a shift in market structure. But mind you, the market has potential to completely close this gap. So a run above the short-term high isn't a shift in market structure. It's a manipulation, what ICT calls story soup. Okay, so a run above short-term highs, not just market run short-term high here, but you want to focus on market structure at key time of day. And what's the key time of day? That's the London close 10. Okay, and you can see we had a run above the short-term high, which it's playing the same role as this run above the short-term high, but the only difference is this is now happening at key time of day. So this is the time of day you want to focus. All right, and this one makes a lot of sense because now it's happening just about the event coming in London close, and that's facilitated primarily the move to completely rebalance this level. So just want to run the quick breakdown on dollar index, and you can look up the same on euro and stuff. So basically there's nothing on the daily chart here on DXY. I mean, we open with another gap, and this already just just makes a mess of everything. So like I said, I'm gonna just be waiting for London close today for jolts. By then I must have gotten there from the London session trading and New York open, New York session, New York open trading, and I can determine whatever I want to do or kind to remain on sidelines, because the markets are extremely volatile this period. Risk off scenario, and just gonna protect my capital until finally we can see very solid place. But that being said, there's something I'm watching on gold. You can see from last month's trading, January's trading, you can see how we closed above this high. So there's a high tendency that February is a very strong bullish month. And not just that, because of all of the geopolitical tensions in North America. I mean, it's always good for gold, and we can see gold reach new highs. Okay, and if we take the fib here, I mean, I'm taking the extension of this retracement, okay, casting it forward in time. You can see we have levels we can define, like the 2850, the 2910, and the 3050. Okay, so these are levels into the future we'll want to be looking at for gold. Okay, here, so first buy side objective will be 2850. That's about a couple points. That's a couple points away. That's about, I think, 3,600 pips away. Wow, that's even a lot. That's a lot. So looking at gold, we have what's this 2850. Okay, I just want to be sure. 2853. Just make it 2853. 2853.50. All right. So if we have our objective into the future, and when you look at last week's trading, if you look at last week's trading, you can see how, if you look closely here, we ran above the previous all-time high. Look at how the body of the candles closed above this. Okay, what this did essentially is validating that we'll be bullish this week going into February's trading. And if we can determine the weekly bias, obviously from based off of last week's closing, there's a high likelihood this week closes bullish. The candle closing above this candle's high. So the daily time frame yesterday validated this bias. How did the daily chart validate this bias? And now if you look at the weekly time frame quickly, if you look closely, you'd see that the return into this previous level here, and you can see, and if you check the daily time frame, there was a fair value gap here. So return into the previous structure, this old high became our new discount array overlapping this daily fair value gap. Okay, so this becomes the new discount array, and you can see how the candle closed bullish. Okay, in terms of the body of the candle, closed bullish, and a rejection here because this was the previous monthly high. Okay, so as soon as it ran through previous monthly high, the market settled inside this range. But look at the candles, considering the fact that we traded into sell side, turn into a support level, hold level here, and run through. So maintains gold to be bullish going into Tuesday's trading. And the only thing then I was now looking out for was is this fair value gap here. So I was thinking, we're gonna run through this candles range low into this gap, and we're gonna find something good, and we're gonna see the markets just expand. Gold is looking pretty straightforward, and going into Tuesday, I think I'm gonna really look at this in the London session. I'm gonna look at gold in the London session. I have in mind this discount array, and I have the overnight trading session, the Asian session, to show me if gold is gonna trade into here or not. So by London session, whatever price action is left, if I can make sense of it, because I would not be blind to the fact that this is an ICT bullish breaker. Okay, this high, and we traded below sell side liquidity here and into this discount gap. So all of this high here, okay, could serve as support here into our buy side objectives. So it's just gold here that's in the clear. Market structure, how prices are respecting levels, and coupled with the geopolitical tensions and all of that, that is really supporting higher prices on gold. So all we have left is the level. This seemed like a pretty obvious level that they could have just traded into, and we want to see just buy side and all of that. Okay. So my thought process was, gold just return here, and then she just finds a way into objective. Okay. So with that being said, that's what that's what I have for everyone, and nothing really on dollar index. I would have loved if dollar index revisits this high, and just runs this high, just completely just run it, validating my expectation in price, which was previously stated on at the start of this year's trading, that we could potentially trade into this weekly very shallow block. So since this week is not done yet, I mean, assuming probably we're done with this trading, the trading of this week, and the candle rejects like this, oh boy, I mean, it will just be an obvious sign that going into next week's trading, we are just going to see lower dollar prices. But since this is just Monday, and they have Tuesday, Wednesday, Thursday, and non-farm payroll to focus over with, I mean, I just have to be patient and not be excited about anything really, because there's no excitement. I just want to do this commentary so that we're all up to speed, and I was even leaning on the fact that I want to show you what a daily time frame confirming protocol looks like, so that you know what it looks like. Okay, and when you have a sense of the high time frame bias, and you find the daily time frame protocol, it will be very easy, okay, for you to go in and apply your trading models. Okay, today, for example, was a classic. Okay, the expectation is that it's not more buy side. The expectation was they return back to rebalance the inefficiency. Now it's left for me to decide if I want to place the trade or not. Since I decided not to trade on Mondays, especially day trade on Mondays, I can trade on Mondays if I'm trading off of the high time frame, like the daily, the 4-hour chart, and I'm I'm having proper stops and all of that. That's fine. But trading for day trading Mondays, no. There are periods when it qualifies for it, I know that, but I would just want to stay away from Mondays trading. It's my own experience. I don't really have very good Mondays, and that's why I don't want to trade Mondays, because periods when I'm very certain of buys, I'm usually I'm likely to do dump shit on Monday. Maybe I FOMO to an entry. So the best way to manage myself and to build myself better, to build my patience, is just to totally just discriminate trading on Monday, so that even if the setup is obvious during the weekend, I'm not going in looking for trades first thing on Monday morning. Okay, I can later go in New York session, but London session Monday especially, damn, I'm running 360 miles north. So yeah, so I hope you found this one insightful.